The markets are lying to you. While headlines are obsessed with the daily price swings in the S&P 500 and Bitcoin, the real story is happening in the shadows of the global liquidity cycle. In this video, we're not just going to be talking about what, we're going to be talking about why. Like why all of a sudden gold is falling. Why is real estate stalling despite demand? And why Bitcoin is trading like a tech stock versus an actual currency. We're going to be breaking down the four major pillars: stocks, real estate, precious metals, and Bitcoin, all through the lens of the 65-month investment cycle. By the end of this video, you won't just know prices, you're going to understand the machine that actually makes them move. Let's break it down. Before we touch the assets, we have to talk about liquidity. Think of liquidity as the fuel for the global engine. When central banks pump money in, the tide rises and all of the boats, they float, in this case, assets. So in early 2026, the tide is going out. We're moving from a stimulus ease of 2025 into a stimulus hold. About 70% of central banks have stopped cutting rates. And when liquidity thins out, investors start to get picky. They stop buying the dreams and they start searching for value. This is always the downward phase of the 65-month liquidity sine wave. And this is historically one of the most dangerous times for retail investors because they keep buying dips that are actually descents. Understanding this tide is what's going to separate you from being a predator and being the actual prey. The stock market is currently in the tug of war. On one side, we have record earnings from tech and AI, and on the other side, we have a liquidity drain. We're seeing a pro-cyclical dynamic. Business growth is actually strong, but the valuations of that growth is shrinking because money is beginning to get more expensive to borrow. If we took a look at the S&P 500, it has been flirting around the 7,000 level, but pay attention to the yield curve. It's flattening. And historically, when the yield curve flattens while the stock market hits a record high, that signals that the smart money is moving into bonds while the retail is stuck in stocks. Do not be the last person holding the bag at the top. Bitcoin is at a massive inflection point. It's currently trading at between 60 and 70,000. But here's the deep dive info. Those ETFs that drove the price rally in 2024 and 2025, we're currently seeing billions being withdrawn weekly. We have to understand that Bitcoin has evolved. It is no longer just that rebel investment anymore. It is a institutional one as well. And it has always been extremely sensitive to the global liquidity cycle. And right now, we're seeing a redistribution of risk. Some people hate Bitcoin and some people still view it as one of their more riskier investments. So we're seeing institutional players take profits to cover their positions in other markets. For you to leave this with a win, to leave here with a win in Bitcoin, you have to understand that Bitcoin is in a loss taking phase. Despite what they tell you, it is not in a capitulation phase. So the final flush, we probably haven't seen it yet. So here, patience is going to be your greatest asset. Gold and silver got hit with that massive war shock. And currently, when I last checked today, gold was down nearly 3% and around 6% for silver. Why? Once again, once liquidity dries up, everything gets sold to raise cash. But here's the break in the cycle's lesson in all of this. Central banks are still buying gold at a record pace. And while the retail is in panic, rushing out to sell their silver coins, the big banks are filling up their reserves. So gold should find a floor somewhere around $5,000, and silver has a massive support zone in between $65 and $70. Yeah, silver had that parabolic move when all of the traders crowded into the trade. And a move like that, the writing is on the wall. So we had that big sell off. But the fundamentals for these two metals are still there. You have the debasement trade with gold in the central banks, and then you have the AI infrastructure that has to be built out with silver. So you need to watch the gold to silver ratio here, because once it climbs above 60, that signals that the market is in extreme fear and are seeking the ultimate safety of gold. So watch the ratio here for entry points, not the headlines. Real estate is finally hitting what I call the great rebalancing. Nationally, prices have stalled to 0% growth for 2026. For years, remember, we had the great state. Nobody wanted to sell because they had very low rates. But now the inventory is up nearly 10%. And in places like the Sun Belt and West Coast, home builders are desperate. They're offering 1 to 2% mortgage buy downs just to move property. This is the first time in years that the power is shifting back to buyers. So if you're looking to create generational wealth through property in 2026, it is about location and leverage. Do not buy for appreciation this year, buy for cash flow and deal terms. So what's the takeaway? We're in a fragile equilibrium. The liquidity tide is out, the investment cycle is resetting, and the old ways of buying and hoping are dead. To break the cycle of financial struggle, you need to be a cyclical investor. You need to buy when liquidity is low and everybody is scared. And you need to take profits when liquidity is high and everybody is being greedy. To use myself as an example, when Bitcoin kept hitting its head around 120,000, I knew that the top was in. Not only did it struggle on the charts, but I also understood the global liquidity cycle. And I knew that we were late cycle last year at the end in the beginning of this year. So I ignored the headlines of it's going to a million, it's going to 200,000. I clearly seen and understood that, hey, Bitcoin should be peaking. And the same thing with metals. I understand that metals are the last thing to go in the investment cycle. So it was right on cue. I had bought metals when everybody was trashing metals and silver sucks. That's when I was buying. And I sold when all the traders crowded into the trade and it made that parabolic move. So you can do the same thing. So if you enjoyed this deep dive, subscribe to the channel, check out the Game of Money playlist to get you started with your investment journey. We not only look at markets, we master the cycle. I'll see you next time.